Good morning, everyone. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. I am broadcasting from the city of Spring, Texas. This is like north of Houston. So, welcome, everyone. Thank you for taking time to be here and learn a little bit about TradeStation. You see the TradeStation logo. Today, we have a guest speaker. His name is Brandon Wendell. He's an educator and trader, not affiliated with TradeStation. He's just a guest speaker, but he brings a lot of experience trading in futures options, and that's why we're doing this series. And for those that are new to this, is lesson number 3 of a 6-part series where we talk about not only futures options, but also future spreads. I wanted to make it clear that in order for you to trade futures spreads or options on futures, you'll need a separate type of account. It's an account that is connected to a trading platform that TradeStation calls FuturesPlus. Of course, you can trade futures in your futures account, but if you want to venture into trading options on futures or future spreads, FuturesPlus is the platform that you'll need to use. And Brandon, in just a moment, will show us a few things on the platform and how you can get started trading those assets. Let's go through some disclosures and some introductions before we jump into today's presentation. Just keep in mind that every symbol and idea that we talk about is for educational purposes only. And also be aware of the risks that are associated with trading online. If anybody needs additional information on these disclosures, please go to tradestation.com/important-information, and you'll find all the links in there to all the associated risks. All right. One thing that I did want to show everyone here in class is where to find the series. I did say at the very beginning that this is lesson 3 of a 6-part series. So it's important that everyone that has not seen lesson 1 or lesson 2, for you to also check those out. Those are the ones that are specifically based or specifically discuss futures spreads. So let me just pull up my internet browser. And from TradeStation's website, go to the top menu, hover over Learn, and then you'll see an option for Futures Education. Once you click there, the Futures Education Center will load up. We'll have a ton of information related to futures in here, starting with the Futures Essential Guide. If I scroll towards the middle of the page, you'll see the Futures Options Replay. That's something that we talked about yesterday. Although yesterday's options replay was equities based, we also do a futures options replay, so take a look at those as well. But right below this box is where you'll find the FuturesPlus Masterclass. This is lesson 3. You notice that lesson 3 here says register for this webinar, so this is a live webinar, but here you have links to watch lesson 2 and lesson 1, which talk about futures spreads and how you can trade those using FuturesPlus. Okay, I'm just gonna then pass the microphone over to Brandon. Brandon, thank you so much for joining us today. And just keep in mind that he's here as a guest speaker, and we're glad to have him. Okay, thank you guys. Brandon, the floor is all yours.
Great, thank you very much for having me again. All right, so we're good to go. Welcome, everyone, to lesson 3. As Jesus had mentioned, my name is Brandon Wendell, chartered market technician. I'm a trader by trade and also trading mentor part-time as well. And I specialize pretty much in the futures markets. I do futures spreads and options on futures, as well as directional futures trading. My background, if you're interested, basically, chartered market technician is a kind of a master's degree in technical analysis. So I've learned multiple ways of analyzing the markets. I've had that designation since 2008. Back then, I think it was only about 2,000 in the world. Now there's about 4,500 in the world. It's like a 2-year program to attain a certain level of knowledge and expertise in technical analysis, basically. And I started off in the industry as a retail broker, hated it. Honestly, it's a sales job. So I moved into back office operations where I was a trader for the brokerage and learned more about how the markets actually move, order flow, and being able to analyze and drive markets in certain directions. I parlayed that into a career as a hedge fund manager, short term, because it's a very high stress industry, and decided to just become a trader for myself and share my knowledge with other people as well. So I've been doing this for quite some time, as you can see, about 25, 30 years in the markets. So let's see. Go ahead and move along here. For today, we're going to do an introduction to options on futures, and we'll talk about what they are, how they differ from equity and index options, which is what many people are used to trading. Equity and index options are contracts that, or what we call derivatives. They derive their value from the underlying asset, either an index or a stock. Options on futures are derivatives as well. However, they derive their value from a futures contract. Very simple. In addition to that, we'll talk about how they work, how to read an options chain. We'll talk a little bit about delivery and settlement. We'll talk about using the influence of underlying prices of the futures contracts and how they influence the pricing of the options. And we'll look at FuturesPlus, as Jesus mentioned, where we're going to have some future sessions, but there are some upcoming sessions on this series where we will actually look at how to apply the option strategies in the futures options and how that works. So again, if you go out to TradeStation.com and you go to the Learn tab, let's see, where is it here? Yeah, right there. I went to the homepage under Learn. You can go to events and you can keep apprised. Actually, I think if you register for this event, you should automatically be registered for the future events. David Russell does a bunch of events. There it is, lesson 4, futures options combinations. So actually applying some of the strategies that'll be coming up on June 17th, so next month. We also have options replay, as Jesus mentioned. That one in particular is going to be on equity options, but the strategies are very similar. It's just a different execution and different platform. There will be an options replay for futures coming up very soon. I'm just not sure when. We also, again, have another session here, lesson 5 coming up, and probably, oh yeah, they're all scheduled, lesson 6 as well. So practical application. So we're going to go a lot more deeper into the futures or options on futures. And this is just the scratching the surface. So basically, options on futures are just that. They are option contracts as you would on any other option contract, but they're on futures. So they're derivatives of a derivative. What? Again, a derivative is a security that derives its value from something else. In the case of an option on equities, they derive their value from the underlying stock. In the case of a futures contract, first of all, a futures contract derives its value from the underlying asset, say gold. Okay, the price of the gold futures contracts and their values are from the actual underlying gold price, the London Metals Exchange or any other exchange that it gets tied to. Options on futures are contracts that derive their value from that contract, which derives its value from the underlying asset. So they are derivatives of derivatives. Okay, but basically what happens is when you buy an option, doesn't matter if it's in equities or on futures, you are paying a premium and you gain rights. There's calls and puts just as you would on other options. The math is very transferable and similar. Many of the same strategies work on equities as they do on futures. Options, that is, on options on equities, options on futures are the same. The seller receives a premium and assumes an obligation. Again, just the same as they would in equity options or index options or ETF options. So the rights that you gain, again, you have calls and puts. And if you buy a call, you have the right to call away, not stock, but an underlying futures contract. If you buy a put, you have the right to put or sell to someone, not a stock, but the underlying futures contract. That's the only difference, is what it is you are actually getting rights to or assuming obligations of. Options on futures are cool because with the equity markets, they're closing down at certain times. Yes, there's after hours trading now in a lot of equities, but the volume and liquidity is very low. When it comes to futures, those markets are open nearly 24 hours a day, depending on the future you're trading. And the options are also available almost 24 hours a day. The options trade basically the same hours as the underlying security does, the underlying futures contract. And it uses the same type of what we call span margin as trading the futures. And I'll explain that a little bit more going forward. Again, if you have questions, type them in. If they're a little off topic, I'll answer them when I can. Towards the end, we'll do an open Q&A. But if it's on something you're asking or we're looking at right now, I'll definitely try to answer that. Equity options can be traded using margin account, right? Well, you still have to use capital, but you use margin and leverage. And yes, you can do that as well. using futures, you use a margin account. If you can use it, typically when you own a security, you can use that as your margin to leverage and buy extra securities based on the value of that underlying asset that you're pledging. The difference is, as I've said before, when you trade options on stocks, it's 100 shares of stock as the underlying or ETF. With futures options, each option contract is based on one futures contract. When it comes to our exercise style, we have two types of exercise. American style, which means you can exercise your right at any time. If you're a seller, you are at the risk of assignment at any time. With European style, however, they cannot be exercised nor assigned until the expiration. So there's no early assignment you have to worry about. That might be a little bit advantageous, especially if you're selling options. That way you don't have to worry about that early assignment. The settlement is, there's one of two kinds. Okay, typically when it comes to equities, you have delivery, which means you would receive or sell 100 shares of the underlying security. However, delivery in futures options is delivery of a futures contract position. So if you bought a call, you could exercise and become long the underlying futures contract. So you actually open a new position in the futures. Or if you sold, you could become short in the futures position. Some of these are cash settled. There's nothing to be exchanged, so they just do cash settlement. Loser pays the winner. Pretty simple. Okay. We'll take a look at the difference between the index and futures options. I'll show you definitely. It's going to be liquidity and whether or not they are cash settled or deliverable. Okay, there's definitely some differences there. We'll see. Also, when it comes to the quotes, well, it's pretty easy with stocks. Options, you multiply by 100. And that's the actual value, and that's the multiplier for the quote. So if you see something selling for $3 a put for $3, you want to buy it, you know that's $300. Futures are a different animal. All futures contracts represent different sizes of the underlying security. For instance, gold represents 100 ounces of gold. If you're trading oil, it's 1,000 barrels of oil. So because they are all different, the value of the options are also different. They're going to be based on whatever the underlying security is. And the same thing when it comes to the tick size and trading hours. One of the biggest advantages of trading the options on futures versus stocks, you do not have to have $25,000 to day trade. Okay, if you're familiar as a stock trader or even an option on stock, you have to trade, or if you make more than 3 intraday trades in a 5-day rolling period, you must have a minimum of $25,000 value in your account. Okay, it doesn't necessarily mean cash. It has to be an equity in your account, basically. And you have to worry about a wash sale, which means that if you make a profit and then take a loss in the same security within 30 days prior or 30 days after, you can't write off that loss against the gain. You got to still pay taxes on the gain, even though you don't realize it. It's crazy. That doesn't apply to futures options. Futures options, there's no day trading rules. So you could actually day trade futures options with a much smaller sized account. Now, there are account minimums for FuturesPlus in order to be able to open an account and trade it. So check with the broker to see what those are. And there's no wash sale rules. It's what we call mark-to-market accounting. So basically, you pay taxes on the net at the end of the year, what you actually profited from, minus costs, things like that, commissions, whatnot. Yeah, it depends on, I'm not a tax professional, so you've got to make sure you talk to someone who is and see exactly how your situation is because it may differ from others. You don't have to have the pattern day trading rules or wash sale rules. So this is a quote for or an options chain. And again, I can go out to live FuturesPlus. Let me see. Whoops, I went to the wrong spot. There it is. And right here, I've got a live chart on corn futures or options on futures. And you can see I've got the June. I'm going to open. Just trying to make it. There's a zoom tool that I use. All right. Now I can zoom in. You can see it's a little bit easier, right? Anyway, you can see these are June contracts. I've got July contracts. But this is what an option chain looks like. Actually, zoom back out for a moment and fix a few things here. There we go. Fix it all to column. And now I can zoom in. So this is an option chain on corn. I have the calls on this side and the puts on this side. We have bid and ask. the size of the bids and asks. So how many contracts are being bid, how many contracts are being asked. And I've got a lot of other information up there as well. And I can actually change the type of information I'm looking at if I want to. What you'll notice is the pricing 1 3/8 by 1 1/8, or 8 3/4, 6/8 basically, by 9 1/8. Right? Now, how do you calculate exactly what it is you're paying for that? Because remember, if this were a quote on a stock and it was $2, you would say, oh, it's $200. It's easy, multiply by 100, no matter what the stock happens to be, or the ETF. Here, you have to multiply by the multiplier of the futures contract. So you have to know a little bit about futures. Corn has a multiplier or point value of $50. So in this case, 9.1 or 9 1/8, you would multiply basically, what is that? 9.125 times 50. And that's the actual price you would have to pay for that option. Okay. So $450 plus, right? I'm not going to do the total math in my head. Where did it go? It's hiding my calculator on me. There we go. 9.125 times 50, 456.25. That would be the actual quote on that 9 1/8 that's now changed. Obviously, the market is live, so the prices are changing. But what happens is when you're trading these futures, you actually have to, or options on futures, you have to use the multiplier of the underlying security. And I'll show you how to find all that as well. It's really easy. Okay. But that's what a chain looks like. Pretty similar. We got bid and ask for calls on the left and puts on the right, just as you would on TradeStation. This is TradeStation Futures Plus, by the way, that we're viewing right here. It is an online or web-based platform that is powerful, has a lot of tools on it that you can use to trade advanced futures, which are future spreads. So if you go back to our lesson 1 and lesson 2, we actually talked about future spread trading, which is not options, and or options on futures. This is the only way you can trade them at TradeStation. Okay. Now you can view, if you go back to TradeStation, the actual platform, I should mention this, you can do some analysis on options on futures on the actual TradeStation platform, but you cannot trade unless you use FuturesPlus. So big difference there. But if you want to do a little bit different analysis and you're used to the regular platform, the desktop platform, I'll show you, you can actually do a bunch of analysis there. It's pretty neat. So I can actually look at the Greeks. I can do a little bit of charting and analysis on the risk reward and the option risk profile. I just can't trade it. I'd have to execute the orders on the FuturesPlus platform. So it's entirely up to you. Okay. And I'll get back to that in a moment. Get back over here. And like I said, the center is the strike. Okay. So the strike for the options, either calls or puts, depending on which side you're on. And they're related to the underlying security. There's the call side. There's the put side. Oh, sorry. Yeah, that's right. Calls and puts. And you can see the blue is the bid and the red is the ask. So with futures options, they're going to be different depending on how many contracts are available. When you trade equity futures, those equity futures are quarterly. They have quarterly expirations. So for instance, NASDAQ that was asked about earlier, you have expirations March, June, September, December. So if we go out and look at the options on them, actually have the NQ right here, I believe. It'll take a moment to populate, but there it goes. You can see I've got, again, come on, there we go. You can see I've got June, September, March, and June, September, December, and March. And what you have to be careful of as well, not so much on these, the equity ones, but on other contracts, this is the expiration of the option, as you can see, 43 days, June 20th, or 134 days, September 19th for September options. But there's also the underlying securities expiration. So remember, when you're trading stocks, there's no expiration on a stock. When you trade futures, there's expirations on the futures because they're contracts. Options are also contracts. So you have two separate expirations you have to deal with. Sometimes they line up exactly, like with the equities. Those monthly options expire pretty much the same day as the underlying security. However, when you go to other securities, and I'll go back to my corn here and take a look. This one is, okay, good example. Now you can see we've got June is tied to the July contract. July is also tied to the July contract. The August and September options contracts are both using the September futures contract. So they have different expirations at times. Okay. You won't have a futures contract that expires before the option. That's impossible. Okay. The options have to expire at the same time or before the future, always. But you are dealing with two separate, distinct expirations. So that's what we're seeing right here. And actually, I think I did a better example of picturing one here where you can see the expirations. You got November, December, both on the underlying December. January, March are on the underlying March contract. Okay. The option requirement or the margin requirement for futures options is not the same as futures. No, it's going to be a higher amount of leverage. So less margin depending on what it is you're trading. But even an outright call is going to be cheaper, perhaps, than the underlying margin that's required for the futures contract. So we're going to talk about that in more detail in a future session. But just to give you a quick example, if you want to trade the June 2025 NASDAQ futures, okay, first of all, if I go out to TradeStation and go to pricing, futures margin rates, right? The NASDAQ's expensive to trade overnight. I mean, that's just it's not a TradeStation thing. That is the exchange setting the margin rates. So if you take a look at long overnight or short overnight margin for the NASDAQ, where are we? There it is. $35,000 for a long position, $35,517 for an overnight long on the NASDAQ futures contract. What is it for the actual? Okay, why is this not loading here? It's taking us time. There we go. Now we got a quote. So let's say we want to buy an at the money call. And the at the money call, we're right now about what, 22,000? We're looking at 1321, we'll call it. That's the quote. Okay, remember, that's not the price. 1321. Let's do 1321.25, which it is right now. The point value for the NASDAQ is $20 a point. So the holding overnight is $26,425 for the margin on that particular call option if you want to buy it. So it's less by what? $9,000 less. Could we make it even cheaper? Yeah, you can do vertical spreads. If I know where I'm going to want to go long and where I'm going to want to exit based on support and resistance, why not sell an option at the resistance level? Let's say we expect it to go from 22,000 to 25,000. Well, in that case, again, we're going to pay $1321.25 to buy the call, but we could sell a call, and we'll discuss this in future stuff too. I just want to show you an example, but we can also sell a call for $264.25, and that lowers our cost. Nope, I did plus, not minus. Minus $264.25 times 20, and now we can do an overnight position on the NASDAQ options for $21,000. Still too rich? Do the micros. The micros are available. They're optionable too. So yes, the margin requirements are much, much less depending on the type of options you do. And again, we've got a full lesson on margins, and we're going to talk more in depth with that. So when it comes to the exercise styles, we have two types of styles of exercise. I've already mentioned this. We have the American style, which means you can exercise whenever you want, including day of expiration. European can only be exercised at expiration. Exercise meaning you want to exercise your right to fulfill the contract by buying or selling the underlying future. Now, this is the tool that I was mentioning that makes it a lot easier for you to understand what it is you're trading. So if you go to the CME website, they have a whole set of tools called Quick Strike, and they're free to use. You can create a free account. I don't know if you need an account to trade or to use this tool or not. Oops. Let me see. If I go out to the CME website, oops, wrong one. I was actually there. I use this website a lot. The easiest thing I found is just to go to a search, and in my history, you'll see it says right there, contract directory. That's what you're looking for. It's called the contract directory and calendar tool. So if I click on that, it'll give me the link for contract directory and calendar tool. And here we are. All of the futures that are tradable with the options that are tradable. So we were dealing with equities. I'll go there. And as the example was NASDAQ, I'll click on NQ. And now I can see the symbols for the options that are available. And it's not just the quarterly options that were available. There are others available to trade. You just have to put in the specific symbols. Okay. Basically, you can see, or maybe you can't. Now you might be able to see it. You'll see the symbol Q3CK5. That is the NQ third week 2025, May 2025. Sorry, the K is 2025, or K is May, 5 is the year. This is week 4, the NASDAQ week 4 options. Or you have, notice, NASDAQ first week, June 2025. M is June. So they use the same letters as the futures do for the months. So let's go to that quarterly expiration of June, which you can see right here, NQM5, that's the actual future. And if I go right above it, actually, that's not the one, I don't think. That's the, again, that's the QN3M, means NASDAQ third week, June 2025. I can click on that though. And right here it shows you option. Let me zoom in again. Actually, we'll do it this way. MC is better. We see option, future, and resources. If you want to see the underlying security, you click on future, and there it is. It's the underlying security. That future actually is based on the September contract, not the previous month June contract, because the June expiration is coming and we've already had rollover on that contract. But it tells you, based on that option I clicked on, what is the underlying security? When does that underlying security expire? Is it cash settled or is it deliverable? That's the future, remember? And right here, where it says UOM quantity, that is actually the point value. If I go back to the option, now this information is on the option. There's the symbol for the option. It tells me what it is. Friday weekly options, 31 days of expiration, when it was first tradable, what style of exercise does it have, American or European style? Now remember, the future is cash settled, right? Financially settled means cash settled. So if you hold a futures contract to expiration and you are in the money, basically it has value, you would get paid. Or if it was in a losing position on your future, you would have to pay. But take a look at the option. The option is actually deliverable. What does that mean? That means if you are long a call, you would end up with a long futures position. If you were short or long a put, then you would be in a short futures position at expiration or an exercise. Okay, so keep in mind, they could be different. However, if you have an option on a future and they expire at the same time, it doesn't matter if they're normally deliverable, it'll be cash settled no matter what, because you can't get delivery on an expiring contract, right? So they can be different, except on the expiration, they always will be cash settled. All right. And by the way, this is recorded. So if you need to go over a lot of the stuff and review, please do. Again, it's under the education learn section, can't speak, right here in TradeStation. Again, you go to the masterclass and you'll see the previous sessions there as well. I click on it. I'm running too many things, I believe. There we go. So scrolling down, you got the watch live and then the recent uploads and futures, spreads, and options. So you can go back and see the previous sessions. So contract directory and calendar tool, really everything's available there. That information is pretty intense. If we were to look at a different security, I go back to choose a different product. Let's say we want to do crypto. Somebody mentioned some Bitcoin earlier. I can look at Bitcoin options. So right here, again, we've got the Bitcoin itself, BTCM5. That's the futures contract, I think. Nope, that is actually the futures, BTCM25, and this is the option on it. And 38 days till expiration. It is a European style. It is deliverable, which means typically if you are buying a call, you would get an underlying long contract on Bitcoin. If you bought a put, you would be in a short position on Bitcoin futures. But the expiration of the option and the expiration of the future are the same. So that means you're going to get financially settled on that day. If you picked a different contract, let's go back here a little bit. Okay, this is P2EM25. So M25 means June 2025. That number 2 means we're in the second week. Okay. And the letter actually is the day of the week, believe it or not. So you'll see it says A, B, C, E. Okay, there's no Thursday option on the second week for whatever reason, but you have Monday, Tuesday, Wednesday, Thursday, Friday options on Bitcoin. And in this case, it is European style. It is deliverable. So basically, if you were to hold this till expiration, It is assigned or exercised if it's in the money and it's a deliverable security. So you would actually gain a position in the underlying future, because you can see the expiration of this option is June 13th at 11 a.m., but the underlying future doesn't expire until the 27th at 11 a.m. Because they have different expirations, if you hold to assignment or expiration and you get exercised or assigned, you would gain a position in the futures contract. And you can see the point values right there. So once again, if we were to look at Bitcoin on a quote for futures, let's see if we add in another column here, CME, I have to do it this way, B for Bitcoin, and scroll down to BTC. There we go, BTC, select, and it'll take a moment to populate. So let's see, if you're long in a call and it expires on the money, it'll just expire. Yeah, you don't end up short. No, if it's out of the money and it's cash settled, you basically just lose the premium you paid, period. Yeah. Just like you would with a regular option on equities. It's the same. Yeah, if it's out of the money at expiration, that's it. If it is a cash settled, though, actually, yeah, you just lose your premium, because it would be cash settled. That premium would then go to whoever sold it to you. So yeah, it works the exact same way. Okay. But no, you're not going to be short a futures contract if you had now the money option. It's only if you were long and in the money put that you would actually end up with a short position. So if you had bought a call, expires, that's it. You just lose the premium. Anyway, these are the options on Bitcoin right here. And again, it takes a little while sometimes for the prices to load. We were looking at the June. Now this is the monthly. So it's not the one specifically that I was looking at. Okay, again, I can type in the specific contract. If I want to look it up, I can actually do that by, instead of going BTC right here, you can see I have P1, PA. I can actually look up. There it is. We were looking at P2E, right? Let me go back to the option. The second week on a Friday, that's P2E M25 right there. So if I go to my quotes, if I really want to look at that specific one, there it is, BTC P2E. I would click on that and I would load up the chain. But I'm just going to use these ones because it's easy. Now, what is the margin? And I'm off that right now. But if we were to look at the margin for Bitcoin right now for the actual underlying futures contract, crypto, Bitcoin, overnight margin, bad. It's only $140,000. So you can buy a Bitcoin futures contract, or you can buy a house. Actually, you can't buy a house that cheap. At least probably not a good one. Not around here. I know that. Anyway, but if you buy the option, let's say you want to buy the $106,000 call right there, 62.25, how much is that going to cost you? Again, we go to the contract directory tool and we see UOM quantities 5. Even on the futures, it shows outright $5 per Bitcoin for a point value 25. Yeah, this moves in $25 increment, or $5 moves per point, and it's 25 bucks. Oops, wrong spot. There we go. Basically, you're looking at 62.60. I think that's what it was. Times, no, that's not. It's times 5, not 25. $31,300 to buy the call, rather than $140,000 to buy the futures contract. A little bit cheaper. Now, you won't make as much, because the same thing happens with these options. At the money options are only going to be moving at about half the pace of the underlying security because of the delta. And we'll talk about those a little bit later as well. Again, this is a very valuable tool to know what it is you're actually trading. And I already went ahead on this with reading the prices. Stock options, we know, are multiplied by 100. You look at a futures contract, and if I go back to my TradeStation here, it should be open now. Got a lot of data coming through. And loading, there we are, option chains. So let's say we want to do BTCM25. See if it lets me see that one or not. There it is. Now it's only showing me the monthly right now, but there it is. There's the quote. There's the chain. We were just looking at 106, 6105. So now click to trade, click to analyze, because it won't let me do click to trade because it'll say you can't trade on this platform. It's only viewable. I'll show you right here. For futures options, it only supports viewing data analysis. To place the option, you got to do it on FuturesPlus. So I'll continue and change this to analyze trade. And now when I click that position, there we are. That's my call, the risk profile. And I can adjust the price slices, do my analysis. I can see the delta. I can see my theta, gamma, vega, rho if I want to. But yeah, You can do all the analysis you want. I was mentioning doing a vertical spread. Let me go back. And I was doing a different security, but it doesn't matter. Right here, I can click. Oops. There's one. By holding Control key, I am able to select a second. So we're buying one, selling the other. And there is my spread. Delta, theta, max profit, max loss. There's my analysis tab with the times. Now you can do a lot of this analysis on the TradeStation Futures Plus, but I actually am so familiar with this with options that it's easier for me sometimes to do the analysis here and then simply place the trade on the Futures Plus. So as I said before, the price on the options chain for futures are multiplied by the point value. So right there, 654 and a quarter, it's the NASDAQ. We'd multiply by $20 per point. So that's actually $13,000 per contract, which is again a lot cheaper than the $35,500 that you'd have for the futures contract. Again, we talked about settlement. We actually have two types: deliverable. So a buyer becomes long the contract, seller becomes short, or cash settled. Loser pays the winner. That's it. And again, if you're out of the money on a cash settled option, you just lose your premium. If you're if you're long, you lose a premium. If you're short, you might have to pay. That's the same as if you were in a stock trade for an option. And I mentioned this as well. Some options expire on the same day as the underlying futures contract. If that's the case, it'll be cash settled even if it's normally deliverable, because you can't take delivery of an expiring contract. You can only take delivery of contracts that still have time left. And here's the thing you got to be careful of. The margins are different. This is a big thing that you can get caught if you're not paying attention. Okay. If you own an option position on futures, your margin is much lower at times, almost always lower, just a matter of how much. But if you are ending up with an exercise or assignment and now have a futures position, the margin requirement will change. And if you do not have enough money, you're going to get a margin call. So be aware of the expirations of your options and whether or not it's cash settled or it's a deliverable. The deliverables can get you in a lot of trouble. Most people who trade options are not necessarily looking to take delivery, even on stocks. I think it was around 2 to 3% of options actually get delivered. The remainder of them are closed or settled. You basically sell to cover or buy to cover prior to the expiration, because you're trying to profit from the price movement of the underlying, not the underlying, but the actual option itself. The value of the option goes up, you sell it for more. The value of the option goes down, you sell it for less. So right here, this is a 2.850 call, and I believe this is on nat gas. It is. So if you have this call that expired in the money, you can see there's the actual price at 3.08. It's well above the call strike price. What happens? If the ball was bought, if it was bought for 0.244 at the time, that's what the price was. The settlement price, we can picture this. If it was settled at that time, it would be at 0.351. That means they made a profit. So they could have sold it prior to the expiration, but if it expires in the money and it's cash settled, you would receive that amount of in the money, but not 0.107, not 10 cents. That's going to get multiplied by the point value of nat gas, which is 10,000. You'll receive 1,070. That's it. If you're in the money with the option expiring, if it's a cash settlement, and again, you get cash settlement on a lot of different options, or if the future expires at the same time as the option, it'll automatically be cash settled. So the initial cost of $2,400, rate of return was pretty good, 43.9%. If you had the out of the money option, this is what David was asking about. If you have an out of the money cash settled option, expires worthless, and you just lose your premium. That's it, because you bought it with premium initially. So I mentioned one of the big advantages before, pattern day trading doesn't exist with these things. You do need to have an account for futures, actually technically a FuturesPlus account access with at least a $5,000 balance. Whether that has to be cash or equity, I don't know. Again, you have to contact the trade desk to find out. Could you cross-collateralize using securities? Again, it depends on the brokerage. They have to let you know that. You can analyze options on futures through TradeStation or through FuturesPlus, but you can only trade it through FuturesPlus. There is a mobile app for FuturesPlus as well. So you can always monitor your positions on the go, or use, if you just have your computer and you don't want to run both at the same time, you could do analysis on TradeStation and then send in the order on the mobile app if you need to for FuturesPlus. So the way we trade these options are pretty much the way you would trade options on equities. Directionally, if you think prices are going to go up or down, you could either buy a call, buy a put, or you could do a vertical spread. Now, this is where we can mimic the equity markets and trade very similarly to how they're trading. And it's neat because, again, there's a lot of education available at TradeStation. If we go back under Learn, we've got Futures Education. Okay, Masterclass is what we're in right now. So you've obviously got the Masterclass information, but right here we got Futures Education Center. And there's information, and there's more options on futures. This is now, no, yeah, this is today. Sorry, forgot what day it was. But there's also more information here. Contract analysis, decoding future specifications, and learning about options on futures. Additionally, since we're dealing with options in general, you can also go to the options education. And remember what I was saying before, if you're bullish, you could buy a call. But what else you could do is buy a bull call spread. So I go over here. Oh, I passed it. There's bull put. Where's bull call? Did I miss it? There it is. Bull call spreads. And you can watch this video and read the article and learn more about the bull call spread. Now, this focuses on equity markets, but the strategy works the exact same way on the futures markets, as I mentioned right here. If I go to, not there, sorry, I was right here on TradeStation. There's a bull call spread. Buying a Bitcoin at Bitcoin call at 105.5 and selling a 109.5. That's a bull call spread. Or if volatility happens to be high, perhaps we change this. Oh, I was on the right spot, wasn't I? No, it wasn't. There it is. And we go back to the education. Oh, that's why I'm zoomed in. It's like, why does this look so weird? And the other bullish spread is right there, bull put spreads. Perhaps you do that strategy instead. So again, I go back to my Option Station Pro, delete that position. And if I'm bullish, I can go ahead and sell, say, the 105.5 and buy maybe the 103.5. That is a bull put spread. And it looks like it's 982.5 for the cost or credit. Sorry, receive the credit. Remember, that's going to be multiplied by 5, that value. So 982.5, I would actually receive $4,900 for that position. My max loss is also the amount of margin I have to come up with, 5,087. So if I'm going to make 49.12, but I have to put a margin of 5,087, that's a pretty good rate of return, 96.5%, isn't it? Now, I do have risk, obviously. I do have a capped profit, but if we go to analyze here, if I'm right and the price of Bitcoin goes up, then I'll profit at expiration. Okay. But it works very similar to the equity markets. You just have to know the little nuances of the futures markets, the point values, the way they trade. If you wanted to put this trade on at 6 p.m., guess what? The markets are open. You can do that. If you wanted to put it in on an equity market, you can't until the market reopens the following morning. So another advantage. If you wanted to day trade some of these options on a smaller time frame, you don't need to have the $25,000. Pretty nice. Okay. Option Station Pro will work on a Mac if you do, I think, the jailbreak. You got to run it as a Windows, yes. Yeah. But again, if you're trading options on FuturesPlus is web-based. So I think it will work on Safari. So you can still trade options on futures. You would just do your analysis here, which you can actually do. Again, I'm using TradeStation and Option Station Pro because I'm very versed in it, but there's a lot of tools that are here. And again, there's charting, and right here, if I go to widgets, there's a lot of different tools I can use for options. You know, we have RQF Viewer, we have Curve Manager. You can look at a whole bunch of different things. And that way you can actually do your analysis on options on futures on this platform. So it's just a matter of what you're comfortable with. Another way you can use these options on futures is to hedge a portfolio. You could actually create protection even for your 401k. If you're invested in equities or mutual funds and you're worried about a market drop, you could put on a position on the NASDAQ or the ES futures, or you could do it on the options on futures for a lower cost. You could buy puts to protect yourself. How cool is that? Now, you'll be losing money in your retirement account, but if you have a self-directed IRA and you do futures trading in it, you can profit in that futures IRA similar to what you're losing in your 401k. And therefore, your retirement account is net almost even. You've got protection. That's pretty cool. You can do neutral market trading opportunities. There are things like iron condors, iron butterflies, calendar spreads, diagonals. You can generate income from these options depending on what you think the underlying securities are going to do. So that's a lot. It's a very versatile tool. That's one of the neat things about it. And I think it's something that a lot of people really need to get into. If you're trading futures and you're trading futures on a longer term basis, you should absolutely learn options on futures because you can even hedge your futures positions, right? A lot of people do what they call stock repair or a collar to protect a position in the stock market. You could do the exact same thing in the futures options to protect futures. Yeah, and I mentioned multi-leg spreads are available. And there's some cool tools, like I said, in TradeStation, FuturesPlus. Unfortunately, I can't do them in the simulated mode, but you have this tool called Strategy Creation, and there are templates there that you can use. Now, I can do it as creating a watch list. So if I go to my widgets here, for instance, and I go to options, I think it is strategy creation, or better yet, let me go back over to, let's do crude oil, see what we got going on there. Yeah, it might take too long to load. Maybe I got the NASDAQ up still. I'll use the NASDAQ instead. So right here on the NASDAQ, get rid of that one. Oh, come on. Yeah, we'll go to September since that loaded faster. I can create a custom position, or I can create strategy creation, and I can do it right off of this chain, or right here, I just create my own. And right here, I have templates. Look at this. I can create butterflies, condor, diagonal calendar spreads. I go to the next page, guts, iron condor. Let's say we have an iron condor we want to do. I click on iron condor and it sets it up for me, sell, buy, sell. Okay. I click on the option right here, type in, let's say we want to do NASDAQ, NQ. There we are. NQ options, hit enter. And now I can just select one. Okay. So let's say I want to do the September options. Now I just decide, okay, I'm going to sell the September. And we're currently trading at what? Right around 21.5. So let's say I've done my analysis on my chart for the NASDAQ, and I think it's going to stay within 19,000 on the downside. So I'm going to sell the 19,000 puts. And on the upside, oops, NQ. And by the way, I can do micro too right there, but I go NQ, September 2025. And let's say we don't think it's going to go above 23,000, and that's call. Now I have to put in my other legs. I just click on them. But I know I have to do sell, buy, sell. Or if, again, this is being shown as almost a long iron condor, I could change those to sell and put the buys on the outside if I wanted to for the actual iron condor. But the point is I can create this whole spread with a template and place the order all at once. So September, again, if I'm selling the 19,000, maybe I buy the 18,000. If I'm selling the 23,000, maybe I buy the 24,000. And there it is, my iron condor, right? That should be a put. There we go. That's it. And I can't do this in simulation mode. I can't put in the order, but I can watch it, put it in my watch list, and there it is. So now when I go to my watch list, showing right there, and if I open it up, it'll show all the legs, and there's the bid and ask for that spread, for that iron condor. Pretty cool. And I can place the orders from here too. If it's on my watch list, I right click, open, strategy creation. It's already preloaded. All I have to do is hit create if I'm in live mode. In order to get to live mode, it's actually pretty simple as well. You just go right here to edit, change environment, simulation, and everything will have a little yellow bar, or live, and then you're good to go. If you don't have this, unfortunately, you're going to have to leg in simulated mode to practice, but you can still keep the watch list, and there's other tools you can use as well, which is pretty neat. So that's what I got for you guys for today. Pretty much used up our full hour here. I want to thank everyone for being here. Hopefully you got some good insight into what the options on futures are like. And again, we've got more series coming up, so make sure you join us for that. Again, you can see it on the TradeStation website under Masterclass and Learn in Masterclass. So I'll turn it back over to you, Jesus. Thanks again for having me here. I appreciate it.
Wow, it's my pleasure, and thank you for sharing all this information with us as well. Please keep an eye on the events calendar too. We have all sorts of different topics coming up on the TradeStation platform, on futures, on options. So please explore all the different topics and register for the ones that you find interesting. Brandon, thank you again for your time. Have a wonderful afternoon, everyone. Thank you for joining us today, and we'll see you next time. Goodbye, everyone.